Hey traders, guess what's back? All right, gang, welcome back to another Forex market preview video. My name is Akil Stokes. I am the Chief Currency Analyst and Head Trading Coach over at TradingPower.com. And this is a video that we try to put out to you each and every week, providing you some insight on what we're looking at in the Forex market. I know recently we've been a little hit or miss, a little inconsistent with getting this video out to you guys, but understand as traders, we do have busy lives. Many of us have very young children at home and families. And well, when it comes to a free video, this just isn't the top priority. However, hopefully we'll get back on track and deliver this to you each and every Sunday. So make sure if you're watching this on YouTube, make sure you're subscribed to this YouTube channel. And also make sure you head over to TradingPower.com. Click that Learn to Trade tab. While you're over there, take advantage of all of the free training. I recommend Into the Gray. That's a very good one. And sign up for our email list. That way you don't miss this video, and that way you also don't miss the free events that we put out randomly throughout the year. So in today's video, we're going to take a look at the dollar Canada. This has been a pair that we've been watching all week in the syndicate. And I want to walk you through exactly why it's on my radar and how I'm looking to get involved in this particular situation. All right, so what I'm looking at here is dollar Canada on the daily chart. And you can see that we're kind of in this rising channel. Most recently, here is our move. Price action has violated our previous uptrend by breaking structure looking left. And then we've just been in this upward channel here, really not doing nothing. You see the market is banging off of previous support, banging off of previous resistance as well. And actually for you guys that are advanced pattern formation traders, there's a pretty decent Gartley up here as well. I know one of our 12-week transformation members, Jeff, caught this. He's probably having an excellent weekend, but check this out, X to A to B, B to C, C to D right here for a nice winning Gartley formation. But what I'm looking for is more of a structure-based trade, and it's going to get clear once we go down to the 4-hour chart. So let's delete our drawings here. Let's zoom in on the 4-hour, and here's what I'm looking at. If we look at the most recent move in the market, here's what price action has done. We've made a move from swing low to swing high. We have our outside return, our retracement, and then we put in a new structure high up here. Now our new structure high, you can see, comes at the highs of that channel, retesting previous structure resistance looking left. And as price action gets to that level, we essentially just channel and go sideways. Market doesn't really want to go higher, can't really break resistance. However, we can't really get past support. And we do that dance for, you know, a few days or whatnot before finally breaking down to the downside. Now, what's important with this break to the downside is that not only do we break out of this this sideways channel, but we also create a new structure low, meaning a lower low, lower close from our previous outside return. So we violate this current bullish trend here. And this move right here is an outside return. And what I would expect is previous structure support to turn to resistance. And what I mean by previous structure support is this. If I draw a horizontal line right at this level, right, you can see, you can look and see how many times price action has respected this price point, right? Market comes here, we play around, we chop around at it. It comes resistance, resistance, right? Resistance is broken, higher high, higher close, and resistance becomes support, support, support is broken, right? Market goes lower, we come back up, resistance, resistance, it holds, we get back up here again, resistance holds, it's finally broken, right? Once resistance is broken, it now becomes support. You can see the market just bangs off this level, support, 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 support. Now we've broken it and we're coming right back up into that same level. And again, you know, a lot of traders will say that the past doesn't predict the future, and technically that's true. We never know what the future will hold, but if you can look back at the price chart, it does leave clues. And if a level was respected many times in the past, there's a good chance that traders will be looking at that level in the future as well, and it may be respected again. So right now we're right in the potential reversal zone or the kill zone for where I'm looking to get involved. And that kill zone is essentially within this channel, right? This is the bigger kill zone, and the smaller kill zone is going to be right up here. You can see the point where price action spiked up and the buying pressure got rejected by the selling pressure. So if we go down one more time frame, actually let's stay on this time frame and just measure out the bigger picture risk reward. Here's what I'm looking at. So obviously we're looking for a short opportunity here. And one of the things I like to do before ever involving myself in a trade is measuring out the risk reward. Now, we're not going to talk about entries or anything like that here because there are so many ways you can enter this trade, guys. And what I teach to my 12-week transformation members is that you want to match your trading style to really your personality. If you're a very aggressive person in nature, you probably want to adapt more of an aggressive trading approach, or maybe just a limit order. You're saying, Akil, I don't need no confirmation from the RSI. I don't need any confirmation from structure. I want to identify a price point. I want to get involved in that price point. And I just want to be in the trade, right? So an aggressive person may attack it that way. A more conservative person, someone that looks both ways before crossing the street and, really make sure the cars aren't coming before running out. They may take a super conservative approach, saying a 2618, for example. So they may need price action to do something like this. They may need price action to come up to this level, start showing a retracement, retest that level, prove that this level is going to hold, get a rejection, right? Break and close below, putting us in a bearish rotation, and then finally get one more outside return and then look to get short. And again, it's a super conservative approach, but a good example of the two extremes. And again, it doesn't matter which one you use. That's something that should be in your trading plan as you grow as a trader, and you should know how you want to attack each situation. But the bigger picture is no matter which way you choose to enter, we want to make sure the risk reward is in our favor. And that's what I want to show you today. Let's just say we enter aggressively right at this level, right? Well, ask yourself this question: where do stops need to be? Where does price action need to go to tell me that my prediction is wrong? And I think the obvious choice is above previous structure right here. If resistance is broken, we know how strong of a resistance level this is. If this resistance level is broken and violated, we're probably wrong. And if we're probably wrong, we want to be out of the trade. So our stop loss definitely needs to go above our resistance level. Now, where do targets go? Well, if price action is going to create and continue this trend, the first place that price action should go to is a retest of our previous levels of support, of structure support here. And you can see that just right there. I know it's a lot of red on your chart, but just right there, we have about a 1.5 to 1 risk reward, meaning that the potential amount of profit we can gain from this trade is bigger than our potential risk. And for you guys that are taking extended targets or trading multiple contracts, right, as far as second positions go, well, you can stretch this all the way down into this level, because if we do get a break and close below that level, we can expect a continuation down to previous structure support, which is down here. So it's a pretty decent opportunity risk reward wise to involve yourself in a short trade. Now, the key is, again, make sure you follow your rules, make sure you follow your plan. Don't rush into this. You have to be patient. We've been watching this in the live room. We've been watching this in our syndicate program all week at a few different levels. And so far, we've never gotten an entry reason at that level. And you can see that's a good thing, because we would have been skunked out for a good loss. So one of the things that we're going to continue to do in the live room this week, one of the things that we're going to continue to do in the syndicate, is just be patient, wait for the market to give us what we want, and then involve ourselves in that trade once it meets our rules of engagement. And that's what I mean by taking good trades. And I'll tell you what, sometimes, we could roll over right here. We could form this rising wedge where you see a big shoot in momentum and then the market sort of flatten out. This typically is a bearish sign, right? We can see a dump off of that and you may never get involved. And guess what? That's okay, because you followed your plan, right? At the end of the day, I know it seems strange, you're missing profit, but following your plan is the most important thing you can do as a trader. And trust me, in the long run, right, the big picture, that's what's going to bring you consistency, like what you saw off our equity curve, or like what you're going to see off our equity curve in a little bit when I show it to you. So this is Dollar Canada for you. Again, something that we'll be watching in the live room, something that we'll be watching in the syndicate, and one of the handful of trading ideas that's on my radar for the week. All right, so hopefully that provides you a little bit more insight at what I'm looking for on this particular pair, and really just my process of breaking down a price chart no matter what pair we're looking at. And if you like this type of analysis, I recommend checking out our syndicate program. We have a $1 30-day trial. So that means you invest $1 and you get to have analysis like this presented to you each and every day. And actually, if you sign up for this week while Charles Miles is still on vacation, Charles runs our War Room meeting. If you sign up this week while he's on vacation, you actually get free access to either or both of our live trading rooms. That means the London live room with Jason Greystone, the New York live room with myself, or you can double dip and do both. So it's a fantastic offer that we're giving away until Charles returns and he can run our normal War Room meetings. Speaking of the War Room, our syndicate performance has been very good as of late. If you look at the chart in front of you, you can see that we started the summer with a little bit of a drawdown. This is the comparison equity curve between last year and this year, just to show you how you can get to the same spot taking two different paths. And you can see we started our summer around week 16 with a drawdown. We did about a 10-week drawdown. And after that, we fought through it and we had about 10 weeks of really, really good trading. And we're basically right where we were at last year around this point. So a very positive vibe around the trade empowered offices. Last year, we did about 65% by the end of the year before implementing any type of money management. And it looks like we're headed in the same direction. So, you know, we don't really worry about the equity curve too much. This is something to show you guys so you can track the progress. But it just shows if you come in, if you focus, if you just concentrate on taking one good trade at a time, good things will happen. Of course, you know, there's a lot of work that goes into that, a lot of work in creating a plan and testing a plan and all that fun stuff, right? You see the sarcasm in my voice. It's not fun at all. It's very grueling, but the result is very good. And it just gives you a confidence in trading that is unmatched by anything else. So pretty good results on our syndicate. Hopefully we can keep that going and really end out the year on a high note. So pretty good results right there, and hopefully we can keep it going. Like I said before, my goal is to come into the market each and every day and just take one good trade at a time and trust that if I continue to show that consistency, that my results will be exactly how I want them to be. Again, process over outcome. If you do things the right way, you'll get the results that you want. Now, for you guys that are used to my videos, yes, I will be adding some bonus footage at the end of this video, so make sure you hang on to watch that. But if you're new and you made it this far, I just want to say I appreciate you hanging in there. If you like what you see, again, hit that subscribe button, hit that like button, and please share this with another trader. Also, I challenge you to go back and watch at least 5 of our recent videos, or any 5 videos here on our Trade Empowered YouTube page. We've got videos from myself, obviously, Jason Stapleton, Charles Miles, Jason Greystone, all of the traders here at Trade Empowered. And I think watching at least 5, maybe picking one from each of us, will give you a great idea of our philosophy on trading and also our approach to the markets from a technical standpoint. I think it's pretty cool to see different traders' perspectives, all encompassing the same goal. So make sure you go and do that. So until next time, plan your trade, trade your plan. Syndicate members, I will see you this week. Live room members, I will see you this week. And of course, 12-week transformation members, I'll see you tomorrow for our private Q&A session. Take care, gang. Keo, now you answered my question. Well, yeah, but here's the thing, Ibra, and I had no problem answering your question. You just have to be open. You got to be open to at least hearing other ideas and theories about the market. And what I was trying to tell you is I wasn't disagreeing with you. I told you I thought it was a great short opportunity. Shoot, if I traded this pair, I'd be looking for a reason to get short as well. If we just look on the 240, right? I mean, we've got massive room to go down here. We can roll all the way down to 66.50s, right? So I thought it was a really good opportunity, but what you need to do is you need to be open to understanding that you don't control the markets. That just because you have a theory or a strategy or analysis, it doesn't mean that's going to happen. Right? And that's very important to a trader. We got to put our ego aside, because I'll tell you what, if we come into this game thinking that we're going to win every trade, or thinking that we're right, thinking that we're smarter than the markets will punish us. The market seeks out traders that think that they're better than the markets. None of us are better than the markets. The markets always win. The markets always win. You know why? Because the market is always right. The market's never wrong, right? It's always right. If the market's bullish, it goes bullish. If it's bearish, it goes bearish. We're trying to be a part of that. But you got to put ego aside. You got to have the right perspective. You got to understand that we never know if we're right. No. Your question wasn't simple. You were telling us, you could ask the rest of the traders, and it could be a language barrier. You were telling us what the market was going to do, and you can't do that. Does that part make sense? Your question wasn't simple. You were telling us what the market was doing. You were saying it has to go lower. And it's a very simple word. It wasn't saying it might go lower. That I would be in 100% agreement with that. But when you say something like it must go lower, it has to go lower, you're dead wrong, because it doesn't have to. And I think that's the part that you're not understanding. It's the verbiage that you're using. And again, it could be a language difference. It could be a language difference. But the impression I got is that you were telling the market what it had to do. You were saying that the market had to be right. Why? Because of your strategy. And if your strategies, if you had a strategy that was 100% and it never ever lost in history, then I would have to agree with you. But I would assume that you don't have a strategy that's 100%. I would assume that you don't have the ability to move the markets in your favor all the time. So again, it could be verbiage because of a language difference. But I think what you meant to say and what you actually said were two different things. And the way that you said it offended a lot of people, especially a lot of people that have given blood, sweat, and tears to this market, whether it be trading or educating or education, being educated. And I still don't think, correct me if I'm wrong, I still don't think you get that. Do you understand what I'm saying? I don't think you get it from the responses I'm hearing. I still don't think you get it. I still think you're going to leave here with the attitude, okay, whatever, Akil. You just confirmed that I was right, and that's it. And, that's okay. I can't control that. I try to control what I can control. But I'm letting you know, if you want to see continuous success in trading, you've got to fix that mindset. You've got to be open to the possibility that you could be wrong, and that you will be wrong, and that it's okay, because all we're doing is making predictions. Yeah, you're right. Nothing is 100%. So stop saying it is. That's my point. Stop saying it is. Don't say it's 100% if you understand that. Don't tell me that the market must do this. Don't tell the market that it must follow whatever you're doing. Accept that you're going to be wrong. You could be wrong. But as long as you continuously follow your plan, as long as your plan has a positive expectancy, you're going to be a very profitable trader. And that being wrong isn't a bad thing. As long as you're following your plan, you're right in your execution. You could be wrong in your prediction, right? That's what predictions are, right? You ever look at people that call sports games, right? They're wrong on the time. But as long as you're correct in your execution, meaning how you approach your trading, how you conduct yourself in the market, how much you follow your plan, then you're always right. And that's the type of right that we want to be. Process over outcome. It's not outcome goals. It's not right as far as the trade won or the trade lost, or the trade went up or the trade went down. It's right in terms of I did everything I was supposed to do. This time it may have not made me profit, but the next time it would. And I trust that my system has an edge, meaning that if I continuously trade my system consistently and I don't sabotage myself, that my equity curve will go in the right direction. That's what's important. And that's what we all need to understand. Every single one of us. All right, let's do Aussie New Zealand real quick, and then we're going to call it a day here.